Hey everyone, happy Monday. Welcome back to my channel. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona, and every Monday I'm here giving a Monday market update. Thank you to all of you who tune in every week. I really appreciate it. And if you're new here, welcome. I hope you learned some awesome information. So let's get to it. I've got my new format going on today. Again, still kind of fumbling around. So excuse me on, some of these fumbles, but I think it's going to get smoother and smoother. So last week was a big week. We had the CPI numbers come out and those were improved. So that was some good news. One data point does not make a trend, though. That's what I wanted to share in this article here. So last week, the CPI numbers came out at 8.5%. Which is an improvement from the 9.1% we were at the previous month. Regardless, we are way above the target of inflation. However, we did see some improvement. So that is encouraging news, but we need to see if this is going to continue. There's been some speculation on whether or not the Fed is going to raise the federal funds rate in September by 75 basis points or now 50 basis points instead. We'll probably get more information about that in the coming weeks. But for now, it's some improvement in inflation. However, it's still extremely high compared to where they want it to be. So we can assume that the Fed is going to continue to hike interest rates, maybe just not quite as aggressively. At the end of the day, last week, the markets rallied because of this news. So that was encouraging from an economic standpoint. So we'll see where this goes. So let's talk about mortgage rates for a second. And again, these articles I hesitate to share because this, quoting a percentage for mortgage rates is really hard to do. It really depends on what kind of loan you're getting, your credit score, all of those things. It's very hard to quote rates. And also, I'm not a mortgage lender. So, this isn't really the thing that I talk about all the time, but I do try to keep up with it, of course. So this article is talking about how rates jump back above 5%, but it's not all bad news for home buyers. Again, I wouldn't quote that number of 5%. I think depending on what you're looking at, you're probably closer to 6 right now. However, the good news is that last week rates didn't do all that much. So it was actually quite a mild week, as I've heard from my sources in the mortgage industry. So not a whole lot of movement. And the best news is that we haven't seen some of those huge jumps that we were seeing in mortgage rates over the last few months. So that's encouraging news. If you're thinking about buying, those rates aren't going crazy at the moment. And with the CPI numbers showing some improvement, hopefully that also keeps us in this range rather than making big jumps in mortgage rates. And if you're a seller, this is also good news for you because it means that more buyers might be interested in getting out and buying a home if they're not getting discouraged by rates jumping point by point every week. So that's where we stand with mortgage rates. Now, let's talk about Phoenix specifically. That's what I always try to focus on this channel, but I do like to bring in some of that broader information of what's going on in the economy. So switching over to Phoenix, we're going to talk about the Cromford report here. And I am a subscriber to the Cromford report. They give us a lot of great data as realtors to share with our clients. And they have this thing called the Cromford Market Index, which many of you are familiar with. And the way to read this is that if the number is somewhere between 90 to 110, we're in a balanced market. If it is 110 and higher, we're in a seller's market, and 90 and below, we're in a buyer's market. And so they look at supply and demand factors in order to determine the health of the market and kind of where we stand. So today we're at 112.5. So again, if 110 is a seller's market, we are just barely hanging on to a seller's market in the greater Phoenix area. Technically, I don't even know if I would call this a seller's market anymore, but the numbers are saying that. So then we look at our demand index here. This is technically 20.5% below normal if we say that 100 is a normal market or a balanced market. So we're about 20% below normal for demand. which makes sense. We have a lot of buyers who are not able to afford homes in the Phoenix area because of interest rates and where prices have gone. And then our supply is around 70 right now. And that means we're about 30% below normal for supply. Now, if you've not followed this channel for a while, you may not know that this number of supply used to be around 20 to 25 in March when I was on here talking about this. So we've seen some huge increases in the supply index over the last few months because we've gained so many new listings to the market. And I'm going to talk more about that in a minute because that is starting to slow down. So I want to show you guys the information about active listings here shortly. So this is where we sit overall with the CMI 112 next week, probably going to be in a balanced market according to the CMI. The demand continues to go down, although it does seem to be going down at a bit of a slower rate. So we'll keep an eye on that and see what happens. So let's move on to look at this chart just quickly here. You know, I always like to show the visual of what's going on with the CMI. This is saying 118. It's just a little bit lagging on this chart. But last week I was saying, is there going to be a plateau of the CMI? And as we look here, I mean, it's starting to look a little bit more like a plateau to me. I think we may be in for that. I'm going to share some other information that will help you guys understand what I'm thinking as far as that goes, but it's starting to look like a plateau in my opinion. So we'll keep an eye on that. Let's look at the CMI for every city in the Phoenix area. That's what this is breaking down. So we saw a monthly change. Here, I got to move myself out of the way so you guys can see. Sorry about that. Okay. So we saw a monthly change in this CMI over the last month of 29%. And that was for this week. We saw that month over month change of 29%. Last week, it was actually 31%. So we've had a decrease in the rate of change, which again is another encouraging thing to see that the market is not going down quite as quickly as it had been before. I'm going to add my face back in here. Okay, there we go. So the weekly change or the monthly change is softening a little bit as we see these numbers. And then when we look in the last week, the average change of all of these cities was about 5.7% over the last week, which is also another indication of slowing. So when we look at the month over month numbers next week and the following week, that might even be less than 29%. We'll have to see, but it does seem like we're starting to lose momentum on the decrease of this seller's market or the deterioration of the seller's market. Now, which cities are in a buyer's market? We're looking at these here towards the bottom. So for a buyer's market, let me scoot this up. We've got Surprise, Tempe, Gilbert, Buckeye, Queen Creek, and Maricopa are all in a buyer's market right now. So everything below Surprise here. All of these numbers clearly are below 90. So that is a buyer's market. And you can see where these were at last month too. So a pretty big change. Last month, the only city that was technically in a buyer's market, well, not even technically, was Buckeye. It was the closest one. Everything else was still over 100. And now all of these cities are below 90 and in that buyer's market. So then right above that, we have a few different cities that are in a balanced market. We have Chandler, Peoria, Glendale, Phoenix, Mesa, and Avondale. All of these cities are technically in a balanced market right now, just kind of hanging on in there, not headed to the buyer's market just yet. And if we do continue to see a little bit of a plateau or this deterioration of the seller's market slowing down, maybe these cities won't get to a buyer's market. I don't know. They are on their way, but not moving quite as quickly as they had been in the past. So that's just, I think, interesting to see when we look at all of these cities. And I always like to look at where they were at last month as compared to this month, because there's some pretty big changes. One thing to note, though, is we do have Fountain Hills leading the pack here, and Scottsdale and Paradise Valley But Fountain Hills is still pretty strong. It's over 200. It's the only city that's over 200, and it has been changing, but not like in the 30% range month over month. Paradise Valley also pretty strong, still at 180, and Scottsdale, Paradise Valley, Cave Creek, that's pretty typical because they are a little bit more of our expensive markets, and you tend to see a little bit more balance in those markets as compared to some of the others with more affordable price points. So, but it's interesting to see Fountain Hills hang in here and being kind of the strongest on the list for quite a while. So let's talk about active listings and what's going on there. And if you haven't been following the market, when interest rates started to go up in March, April timeframe, we really started to see a lot of demand fall off. And with that, our active listings started to rise because we didn't have the absorption rate of all these buyers buying these homes. In addition to that, we had the factor of people thinking that we were hitting the peak and wanting to get their homes listed before we got out of this craziness. So we just saw this influx of new listings hit the market, which did not help the situation in terms of, you know, pricing and slowing down the market. So essentially all of those things really slowed down our market here in Phoenix. And since then, we haven't really absorbed the number of listings on the market. We've had a lot of listings on the market as compared to the last 2 years, and things have just slowed down in general. And so now we're starting to see a little bit of a leveling off of new listings coming to the market. So I'm going to come over here and let's look at active listings. So in the last 4 weeks, we've had about 10,747 active listings hit the market. And that's actually up 5.6% from the same time in 2021. So we know that our listing counts are higher now than in 2021, but 5.6% doesn't really feel like it's that much as compared to how it's felt over the last few months. So I thought that was interesting. In the last 7 days, we've had about 2,544 new listings hit the market, and that's actually down 5% from the same week in August of 2021. So this is one of the first times that we're seeing active listings be less or new listings hitting the market, fewer this summer than it was last summer, because we've just been kind of blowing last summer out of the water as it relates to listings on the market. So here we're sitting today at about 17,000 listings on the market. This has been a pretty steady climb since all of this started. This is back in April, towards the end of April, and then you see all of this, continue. We were just a little bit over the 2021 levels for a bit in the beginning of the year, and then, totally diverted. So we've seen these huge gains in new listings hitting the market, and now we're just starting to see a little bit of a slowdown. Like I said, we're about 5% lower than this same week in August last year, which is interesting. And again, this is as far as new listings hitting the market. So this chart here is showing active listings altogether, new listings hitting the market in 1 week. That's not what we're looking at here. So that's why this year is higher than last year. I'm just trying to show the overall difference between what we have on the market today as compared to last year. But we are starting to see active listings hit the market at a rate of 500 per week versus 1,000 per week. So that's cut in half to what we were seeing towards the beginning of the summer here. So again, another indication that new listings coming to the market is slowing down. And if we start to see demand kind of come back, possibly with these interest rates hovering and not making huge leaps, those buyers may actually absorb the amount of listings we have on the market, and maybe we will hang out in a balanced range instead of going into a buyer's market everywhere. I don't know. I think we're kind of at a turning point at the moment. I'm not quite sure where we're going to head from here, but it certainly seems like we're starting to see some changes from the, pivots that we've had over the last few months. Starting to see those active listings slow down, coming to market, and a little bit more stability with interest rates and the market, encouraging news with inflation. All of that stuff, I think we may start to see a little bit more stability especially as we get into fall. Our market here in Phoenix tends to pick up a bit as we get into fall. Summer is our slower season. So all of this kind of hit at the time where we're usually slower anyway. So it'll be interesting to see over the next few months how things change, if we really are going to kind of balance out and stabilize, or if we'll continue further into a buyer's market, or something crazy happens and we fly back into a seller's market. I don't know. Wish I had a crystal ball for you, but that's where we stand this week. I hope all of that information is helpful. If you have any questions, you can reach out to me directly. My contact information is in the description below, as well as a link to set up a time to chat. There's also lots of cool stuff you could check out in there, like a relocation guide, search my MLS, and get an instant home value for your house. So make sure to check all of that out. Reach out to me if you have any questions or real estate needs. And thank you guys so much for watching this week. I will see you later in the week with some more real estate news and another video. So I'm Caitlin McKeag with the Desert Dreamers team at HomeSmart.